That's what I truly think is going on here, and that's why, in our portfolio over the past year, one of our best performers actually was Dow Chemical.
Luke is with Lloyd Financial Group, and Luke, I thought this was kind of interesting as we look at where we're trading these markets right now today higher. The amount of outside money that's coming in, could that be flowing? Would it be flowing out of the equities or out of bonds, or where might this money be flowing in from?
Yeah, I think it's out of a little bit of both. And the reason being is, as we talked about just a few minutes ago, is those higher oil prices that seem to be remaining higher for longer, higher at least longer initially than a lot of people thought. And what that does when you have higher oil prices, impacts all parts of the economy. When it comes to all these commodities, the cost of transporting these commodities, the cost of doing business with all the ancillary, secondary, and tertiary areas of this, it definitely increases the cost of these commodities. So that's what I truly think is going on here, and that's why, in our portfolio over the past year, one of our best performers actually was Dow Chemical. Even the chemical industry is going to be benefiting from these higher oil prices, or at least not necessarily benefiting directly, but benefiting from the higher costs, which means usually more revenues. And when you have more revenues, you have more multiples and multiple expansion in the stock. So that's essentially what's happening. There really hasn't been a shock in interest rates. So the question again becomes, how long does oil prices remain higher? And the bond market's kind of pricing in that we aren't going to see a dramatic inflationary pressure, but we'll see, because that information can change.